Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's have a quick recap of the major events of this week. At the very beginning of this week, we had a sizable sell-off in stocks, energies and metals across the board. This was down to a number of factors. First off, OPEC Plus announced plans to increase the supply of oil over the next 14 months. This essentially will undo all of the production cuts that were imposed last year as a reaction to the COVID-19 pandemic and the shutting down of various economies. We also had fears that new COVID-19 cases were on the rise. This was leading to concerns that governments might reimpose some sort of restrictions which could curtail economic activity and in turn weigh on the robust rebound that we've seen across the board. Also playing into the mix was the usual concerns about high inflation, so the result was a sizable sell-off in stocks. This here is the US500. As you can see, it was a major move to the downside, but since then and the last few days of this week, we have seen a very healthy rebound in the US500. As you can see here, the market has recouped basically all of the ground that was lost in Monday's sell-off. We're pushing higher. We're not too far away from the all-time highs that were set in early July. While it holds above these three simple moving averages, it's likely the nearer term uptrend will continue. A move higher from here could see the market target 4,400. Taking a look at oil, it's been a similar situation whereby the oil market endured a fairly sizable and painful decline. It is worth noting that oil was already a bit soft going into the sell-off, because the highs here seen in July failed to clear the highs in early July. So we endured a large move to the downside. We've had a reasonably good recovery in oil. It hasn't reached the level seen in the middle of July, but has recouped a lot of the ground. While oil holds above these three simple moving averages, it's likely the rebound will continue. A move higher from here in UKOIL could see it retarget the mid-July highs in around 67.22. Now looking back at the US500, looking at the major events of the week ahead, Wednesday's Federal Reserve meeting is going to be likely to be the biggest event of the week. We're not expecting any change to monetary policy, but of course the dot plots will be very much in focus, and the language from the Federal Reserve about when it is potentially looking to taper its stimulus package. At the June meeting, it was signalled from the Federal Reserve that we could see 2 interest rate hikes in the year 2023. Are we going to see something a similar update this week? Are we going to see a signalling of potentially only 1 rate hike in 2023 or potentially 3 rate hikes in 2023? Also, the language in relation to how the economy is performing is going to be in focus. In the last couple of weeks, Jerome Powell, the head of the Federal Reserve, while testifying in front of members of Congress, said the US labour market is strong, but it's not strong enough yet to justify tapering the government bond buying scheme. So focusing in, traders are going to be listening out for any language around when potentially the US is going to even approach changing its language to talk about altering its stimulus package. Any signs that the US economy is improving faster than expected, that could weigh on US stocks and in turn push up the US dollar. Any signs that the recovery is actually fading a little, that's likely to actually assist US stocks and also hit the US dollar, because should the rebound be looking to fade, traders could take the view that the US will need to keep its ultra-loose monetary policy looser for longer. In terms of some of the big events to what also next week, we have the advanced reading of the US GDP on Thursday. That's also going to tie in with how well is US economy holding up. Also on Wednesday, we have the Australian CPI numbers. So we'll take a look at what's going on with the Aussie dollar. So the Aussie dollar earlier this week fell to a 7-month low, but since then it has rebounded. In the past few hours, it's been trading in a relatively small range. Traders are now wondering, are we going to see a continuation of the broader negative trend in the Aussie dollar, or is it going to be a case of we are going to look to kind of potentially find support in this zone here and then continue to have a move higher? While the currency pair continues to hold below these two simple moving averages, and while it also holds below the recent high of 0.7398, it's likely we could see the broader negative trend continue. A move to the downside could see it target the recent lows at 0.7288, and a move below that could see it target 0.7222. If you take a look at price action in the last few days, Aussie dollar has been moving higher. If it do manage to continue this recent uptrend and we do clear the recent high at 0.7398, that could potentially set it on course for this area here in around 0.7502. The CPI inflation, the CPI numbers from Australia Wednesday are going to be in focus because it gives an idea of what demand is like in Australia. If you continue to see signs of high demand, that's likely to have a positive impact on the Australian dollar. But if we see signs that demand is fading, that's likely to have a negative impact on the Australian dollar. That's all from this video. Thank you very much.